Before I introduce the next panel members on stage, and you guys should help me welcome them with a big round of applause, let me give you final few pointers of discussion that this exciting panel is going to talk about in the next 45 minutes. Digital payments, is cash dying or transforming? Some of the pointers of discussion this panel will cover include why NBFCs should embrace digital payment solutions, cash light, the path to a cashless economy of payments, tapping into the impending era of mobile payment services, deploying artificial intelligence and machine learning in payments, redefining the payment modes of cashless payments in digital era, and securing the payments with IoT and many more. So ladies and gentlemen, without further taking your time, please help me welcome the panel members in the order of the sequence. Joining us first in this panel, Mr. PRASHANT N. DESHPANDE, CISO and CDO from Shriram Finance. A big round of applause to Mr. DESHPANDE. Welcome to the panel, Mr. DESHPANDE. Please have your seat. Joining next in the panel, we have Mr. Jeetendra, Manik, Business Development Incharge from National Payments Corporation of India, NPCI. A big round of applause to Mr. Manik. Mr. Manik, welcome to the panel. Please have your seat. Joining next in this panel session, we have Mr. Suraj Shetty, Head of Customer Experience Learning and Development from Ring. A big round of applause to Mr. Shetty. Welcome to the panel, Mr. Shetty. Please have your seat. Joining next in the panel, we have Mr. Naveen Kumar, Assistant Vice President for IT and International Operations from IFCI Factors. Mr. Naveen Kumar. All right, moving ahead, I would like to call on our honorable moderator for the panel, Mr. Sumit Sharma, Founding Director of Radian Finserv. A big round of applause to Mr. Sharma. Mr. Sharma, welcome to the panel. Please have your seat. Request all the honorable panel members to kindly take your seats. So, looking forward to a great panel session, Mr. Sharma. I believe Mr. Naveen Kumar is still not in for the panel, so if Mr. Kumar joins in, we would request the panel members to kindly accommodate him. So, over to you, Mr. Sharma.
Hey, thank you. Hi, good afternoon, everyone. I guess Naveen's not joining us. We'll go ahead. So my name is Sumit Sharma, and I have been tasked to moderate this session. We've had multiple jokes about how the sessions go after lunch, and we'll request your indulgence as we go through this this period of time. Very quickly, let me just start with a quick introduction round. Now that there are 4 of us over here. I run a company called Radian Finserv. It's about a year plus old in the operations. We are an NBFC working in the space of gold-backed lending. Prior to this, I founded a microfinance company, and before that, the bulk of my career has been in banking and finance. My longest employer was HSBC, with whom I started in India and worked in various parts of the world, including Hong Kong, London, and Indonesia, before finally working in Singapore for a period of time and then coming here. Like I said, I then founded a microfinance company. So there are some top issues that we want to discuss around lending and payments in cash and how that works in rural parts of India. And then, of course, the elite panel members with me who would be talking about the various experiences and the way forward. May I request the panel members to introduce themselves. Maybe Prashant, start with you.
Yeah, thanks Sumit, and thanks Sinex Group specifically, because when they called me, about the panel, and they shared me 2-3 options. Okay, so I'm working with Shriram Finance Company, where we deal with truck drivers. Okay, and we almost have 3 million truck drivers with us as our customer. So I just, cash is very near to us, because my segment of customer deals in cash, day in, day out. So I said, I'll be happy to be part of this panel. So myself, Prashant Deshpande, I am the CISO and CDO for Shriram Finance Limited. Okay. We are specifically in commercial vehicle finance, that to a used vehicle finance business. And I'm with Shriram Finance for last 25 years now. Okay. Thanks.
Thank you. Yes.
Good afternoon, everyone. I am Jeetendra Manik, I am currently associated with National Payment Corporation of India as in charge business development, largely managing the mega public sector banks, barring SBI, the other big fat giants which got amalgamated a couple of years back. So yeah, it's been 4-year stint with NPCI. It's a payment university, you can say. Even I was glad when I got to know about this panel. So yeah, looking forward to contribute on the payment space. Thank you.
Thanks, Jeetendra. And finally, Suraj.
Thank you, Sumit. Myself, Suraj Shetty. I had customer experience and learning and development for Ring and Kisht. So Ring is a fintech platform that provides easy access to credit to millennials, to Gen Z, as well as to those who do not have access to traditional lines of credit. So being head of customer experience and learning and development, it helps me not just understand what customers are saying, what customers are feeling, what are the likes and dislikes of the customer, but also implement the same things for the as a learning courses for the entire organization, be it for the field team or the contact center team, as well as for the marketing team or the products team. And I think that's what is something that is very important for us, because unless the learning team or the learning and development team or the training team is completely in touch with the customer preferences, the right kind of training cannot be provided to the employees. So that's what.
Wonderful. Thanks, Suraj. So as we start, I think there is a lot of data and a number of reports that seem to suggest about that cash is increasingly, steadily, slowly, definitively moving away from circulation. And yet we also see a lot of practical examples or suggestions which essentially say that cash is here to stay. So we'll have a little bit of a debate around that, including things which are relatively unique to India, where a parallel economy occasionally runs. So we'll talk a little bit about that. But let me start by asking Jeetendra. NPCI typically is synonymous with cashless. Maybe you could give us a little bit of flavor as to how big the market is today. Maybe the number of transactions as well as the value. There are suggestions about India being the leader and so on. So if you could just give us some data on where we stand today.
Sure. So today we hold a population of 1.43 billion. Last year we have clocked digital payments in terms of value is 114 billion that we have clocked, and I think we are number one in the entire world. I think China is number 3 as per the last report which I have seen. So yeah, largely the growth has been on the UPI adoption. If I see from this total value that I just mentioned, 75% is contributed from the products that are evolved by NPCI. And largely, to name few, is RuPay, which is our homegrown scheme, which is at par or better than Visa and Master, I would say. And yes, UPI, which has cutting edge technology, and it is evolving every other day. So just want to highlight on few aspects that how UPI has made a shift in market, especially into the digital adoption. And also we have not only touched the urban, but also want to highlight on the rural market, where we see there is less adoption of smartphones. I would say maybe the affordability, but yeah, we have some of the great solutions on the feature phones for which you don't even need an internet. So especially in the rural markets where we do not have a robust network, payments are still happening through the new developments that we've got, which is 123 Pay and Hello Pay, which we just launched in GFF, Global FinTech Festival, last month. So with that, you can just say, hey, Raj, I want to transfer 100 rupees to you. So it goes that seamlessly. So we have also come up with a product called Credit on UPI. So yeah, definitely with 350 million users in market, we want to see how we can leverage credit with convenience to these customers. So we, on RuPay, we have launched credit line on UPI, and we are seeing a drastic shift in the transaction pattern. We are seeing transactions on credit card which was not there earlier. Even a mom and pop store, a chai pan wala can also accept credit card because it's through UPI. So just wanted to also touch up on the POS, where credit cards were limited to POS transactions, wherein the POS count is only 25 million in India. But if we see at the QR codes, we have more than 300 million QR codes across India. So every other person has a QR code to accept payment. So yeah.
Great. I think lots of interesting points there, including the fact that there is a clear shift now happening. Earlier, I mean, credit card as an example, and we'll talk a little bit more about that, Jeetendra. But the point is, today, if we look at India, it is clearly number one, and by a long distance.
Yes.
And which is occasionally surprising, given that, you know, till only a few years ago, we didn't have a preponderance of phones, forget smartphones. So I think it's happened very well. And I think I would just want to reiterate one point that you mentioned, that you go to a mom and pop store, or you want to go and buy maybe a couple of bananas, you can use a cashless transaction, which was unheard of. So we're in a good place from a cashless transaction perspective, if that is considered the way forward. Let me try and bring in Prashant over here. Prashant, you deal a lot with the rural segment, if I may say that. You know, your used vehicles, truck drivers, they traverse the length and breadth of the country. You also do a lot of loans with them, for them, and so on and so forth. What are your observations in terms of how the money is being transacted by these guys with you, as well as any anecdotal information that you may have on their behavior?
Yeah. So just before answering this question, as you mentioned about few numbers, and Mr. Jeetendra also mentioned about few statistics, you know, I would like to add few more statistics to that. Yes, our digital transactions are increasing, but on the other side, you know, I was just checking. If you see, number of ATMs also are increasing. Okay, the cash in circulation is also increasing. Okay, I just saw some statistics where, you know, they says average an ATM machine per month, you know, it gets refreshed with more than 1 crore of rupees every month. Okay. So yeah, digital transactions are increasing, but yes, you know, supporting to that, actually, what has happened is that government specifically with lot of its beneficiary schemes, I feel, you know, they have, you know, deposited directly into the end user's account money, and then most people are withdrawing that amount. So yes, we cannot say cash is dying, digital transactions are increasing, but yes, cash transactions are still happening in multiple pockets. So one of the area where, you know, cash is still there is, as you rightly mentioned, truck driver. What happens with us is that our customer, whenever he moves from one place to other place, okay, so he moves from Mumbai to Ahmedabad to Bhopal to Delhi, then Calcutta, he never knows when he'll come back. And that entire logistics, whenever he complete that journey, most of the time he will get his, you know, money in a cash. Okay. Second, he has to, you know, the major expenses when he travel is fuel. Okay. Still in tier 3, tier 4 cities, still they prefers to have the cash while you're refueling your vehicle. Then, you know, though you say that the smart tax or everything are there, but now as the smart tax number is increasing, I can see a cash line is the lesser number of vehicles than the smart tag actually. So these truck drivers need a cash in and out to travel from one location to other location and to meet their needs to run that vehicle on the road. Okay? So yes, as we know that cash cannot be removed from the transaction as of now. So what we have done as a Shriram Finance, because we understand the risk if a customer carrying cash from one location to other location. So thanks to NPCI as a backbone and thanks to all these fintechs which are presented over here, okay, we have almost tied up everyone who is available on that fintech part with the point of collection. Okay, so whenever my customer gets a cash with him, okay, we have tied up with all fintechs, all banks, including post offices, where a customer can go and deposit his cash, and then he can make the payment using either through our app or any other app available on his mobile. Okay, and what we have done beyond that is that, as most of my drivers, we have checked almost 50 to 60% of my drivers are not having a smartphones. Okay, so we have ensured we are tied up with NPCI, and we are doing kind of a OTP based transactions, where whenever he go to fuel his vehicle, refuel his vehicle, he just has to give a mobile number to the either HPCL or any Reliance Indian Oil fuel tank station, and then he will get an OTP. He has to submit that OTP to that vendor, and his transaction is completed. Okay, so yes, cash transactions are still there. The digital payments are coming in different avatars like BBPS, wallets, and lot of fintechs are coming. We are doing certain OTP based transactions. So I'll say, though the digital transactions are increasing, cash has still be the a preferred alternative. I'll say not the first thing, but preferred alternative for a lot of users in the country.
Okay, thank you. Thanks, Prashant. So a good counterpoint over here as I see it, because one, of course, India is steaming ahead at a very fast pace with the cashless or digital transactions. And yet we have a first-hand experience of someone who deals with a lot of people who traverse the length and breadth of the country, where cash is not going to go away in his words. And I think there are certain parallels that we can draw from some other industries, and we'll come to that in a moment. Suraj, if I could ask you, you deal in practically a completely cashless industry where you are dispersing money digitally, you are getting money back digitally. So two questions. One is, what's your response to what's been said that cash is here to stay within the framework of what we've discussed? And second, how do you see this progressing? Do you see, I mean, I suspect your loans are typically short tenure or small ticket. Will this trend start moving in other areas as well?
That's an interesting question, Sumit. So I would say when it comes to digital lending, we started with having, like when we started in 2016-17, it was like more of a document verification. There was nothing digital. So people were applying on the app, they had to upload their documents, and then the verification happened, and it would take around 4 to 5 days. Then we came up with a completely 100% digital process, wherein the customer doesn't have to upload any documents. Right from as soon as he enters his PAN number, the CKYC checks, and then we move on to DigiLocker to verify his Aadhaar and identity and address. Then there is a matching done with the name as well as the image of the customer, and a selfie is taken to match the image with the Aadhaar image. And that's how we do all the fraud, necessary fraud checks, and KYC is completed as per the regulatory guidelines. And then the final is the bank step, wherein we do a penny drop to check if the bank account is in the name of the customer or not. And then once we are assured about the identity of the customer, that's when the disbursement happens. And the disbursement hardly takes, the entire application process takes around 3 to 4 minutes. And the customer has amount disbursed to his bank account. Now, when it comes to tenure of the loans, there are short-term and long-term loans. So it can be minimum 62 days, and maximum it can be up to 62 days is around 2 months EMI, and maximum it can be up to 24 months. And the amount can range from 5,000 rupees to 2 lakhs, depending on the customer type. So when it comes to customers, we just don't look for customers who have the best credit scores. We also look at customers who are new to credit, but we believe that these customers also have propensity to repay on time. So what we do is we start with small amounts of credit. So it can be like 4,000 or 5,000 credit to these customers, and once they show timely repayment behavior, that's when they graduate to higher amounts like 10,000, 50,000, etc. based on the payment behavior. Now when it comes to once the customer avails loan through a digital app, the disbursement happens online directly into his bank account. So there is no cash involved over here. And also since the customer has applied through a digital channel, we have seen that the customers already know how to repay digitally. So cash has been almost absent in this entire transaction, wherein customer comes back and pays on the app itself through the payment gateway, and most of the times customer uses UPI as a payment option for making the payment. And there are a very less percentage of users, like 7 to 8%, who prefer making payment through debit cards or net banking. Otherwise, mostly it's UPI based payments that customers do. And we see that there are very rare cases where customer is not able to make payment, or he's facing some issue with his banks, that he requests some executive to be sent to his address for making the payment in cash, which is very less, and it's like becoming zero over a period of time. And I believe as we move towards a digital economy, right now, previously we used to rely heavily on bank statements, that if someone wants a loan, he needs to provide his bank statement. 3 months bank statement is mandatory, only then he can get a loan. But from there, we have moved on to rejecting bank statements and looking just at the credit score of the customer, creating an imputed income from the credit report, wherein we can get an estimate of how much the customer is able to pay based on his past loans. Now, if the customer is new to credit, again, we do not have much data on him. In that case, there are other alternatives available. For example, gold loan is one alternative, wherein a lot of fintechs are playing a big role because 80% of the Indian population has access to gold. So this is a very big potential over here, wherein even if customer doesn't have a bank account, he can get access to credit through gold loan, and from there on, one credit entry goes into his account. So from new to credit, he becomes a credit healthy customer, and just by taking one gold loan, if the fintech reports the loan to the credit bureau, he can, a lot of opportunities open up to him. He can avail a personal loan or a home loan based on his credit data. So, and third I would say is account aggregators play a big role over here. That's increasingly, because just based on the mobile number of the customer, the bank account can be traced. And based on the bank account, consent can be taken from the customer, and 3 months bank statement can be received from the account aggregator, which will help the customer as well as the NBFC to disburse loan instantly without making the customer go through the hassle of uploading the bank statements. Great. Fourth one is if customer is not able to even provide a, if the customer's bank account is not even compatible with the account aggregators, then the last and the least preferred step is uploading of bank statements. Now these, a lot of frauds can happen in upload process because it can be a scanned copy, it can be edited copy which he is uploading, it can be a PDF, etc. But we have solutions wherein these frauds can be checked based on the type of document, edits have not in the document, even the total, the credit and debit balance is matched. So even this is the last step that we take, wherein we allow customers to upload their bank statements and see if they are eligible for credit.
Okay. So
just
you got something to say?
Yeah,
go
just
ahead.
want to add what Suraj brilliantly explained. I think so in today's world, onboarding a customer digitally is also a competitive edge as to how seamlessly and how smoothly you are onboarding a customer. The minimum steps that are required for a customer to onboard for any credit line or a credit card, I could say. So we are dealing with all banks, and we are seeing healthy competition between banks where they have moved from a 3-click journey to even a 1-click journey. So it's all up to the pre-approved, pre-qualified base that they work on to nudge and pass on instant credit, instant virtual card for them to transact then and there.
Sure. Thanks. So, folks, I mean, there are only 4 of us over here. And I was thinking that if we have different points of view, how do we, and we are possibly seeing a little bit of diversion of thought over here. Suraj, who works in a company which is pure play digital, Jeetendra, who's an NPCI, where the name suggests it's all cashless, and PRASHANT, who's talked about the fact that cash is here to stay. Slightly tilted, so maybe I need to come in and add a little bit of a weight on what PRASHANT is saying. So I mentioned that I used to run, I still run a microfinance company where we deal with women in villages, and bulk, in fact, all of the collection typically happens in cash. And there was a time during the pandemic when obviously cash collection was impossible, not just difficult. And many organizations in the industry tried digital payments with fairly limited success, I must add. And the cash continues for various reasons. So let me just throw this back to Suraj and to Jeetendra. Given where we are and where the sort of entire country is moving in this direction, we still have pockets like this and what Prashant mentioned. What's your view on how this will progress? Either one of you.
Yeah. So for this, NPCI has a product called Aadhaar-enabled payment services. So we work with banks, we work with aggregators who are business correspondents in this tier 2, tier 3 markets, who definitely help such customers and help us in this financial inclusion. So they can reach up to the last mile and help them transact, either deposit or deliver cash. Well, initially also I talked about in these rural markets where we know they are largely a population which is holding feature phones. Maybe they are not able to afford smartphones to use the UPI apps to make payments. But yeah, we have come up with product called 123 Pay, which is a payment through IVR. Anybody can make payment, peer-to-peer payment, utility payments, all sort of payments he can do through that IVR. And now we have moved ahead, we have advanced on it with conversational payments, which we call it Hello UPI. So even through that, you can make payments quite seamless in these markets.
Okay. Suraj, you want to add anything?
Yeah. I would say there is a part of the economy where people are completely dependent on cash. Like you said, microfinance sector, where especially when you're financing women entrepreneurs in villages. So right now when it comes to digital lending, we have not entered these sections yet, because here we have seen most of the lenders are completely new to credit. While we do finance customers who are new to credit, but here the problem is even access to smartphone is an issue. So they do not have an access to a smartphone, which is an entry barrier, for example, right now, as of now, because having a smartphone is the #1 requirement for digital lending today. When it comes to UPI, of course, feature phones can also be used, but when it comes to lending, there is one roadblock that when you have a smartphone, a lot of fraud checks can be done on the customer with respect to the kind of device that he is using, the kind of location he is from. These things can be checked, and based on that, loans can be given. Otherwise, it's not just the disbursement that happens. The most important part of lending is collections. So if the disbursement goes wrong, there can be issues in collections. So when we lend to tier 3 cities or rural areas, there is a very small part of population that avails loan, which has access to smartphones. And I believe as and when access to smartphones increases, as right now, like we are at the edge of launch of 5G. So once the 5G network spreads pan India and there is more people coming into who have access to smartphones, I think that's when lending would take a jump. And also credit on UPI is a very powerful feature, I believe. Because once customer, right now it's like RuPay powered, wherein you need to have a RuPay credit card if you want to avail credit on UPI. But what I mean is, a lot of small shops or small businessmen, even in rural areas, use QR codes for accepting payments. So payment service providers like GPay, PhonePe or Paytm are in a very good position to lend to these customers, because they already know what kind of payment behavior this customer has. Even if he's staying in a rural area, they already know how much business he does, how much payment he receives, how much payments he does. So they already have this record. So based on this record, a lending decision can be taken.
So if I were to ask you to make a prediction, is this swathe of people likely to come into the fold of cashless and digital payments? And if yes, what would be your predicted time frame? Loaded question, but go ahead.
I would say there are two important things. One is, as I said, the smartphones. Adoption of smartphones is very important, and also 5G, which I would see in around 2 to 3 years taking up, which would increase, which would bring in the new next billion customers into the financial system. And also, second, I would say is the spread of UPI, which is already spread across India, but as UPI connectivity, as access to UPI, and as more people in rural areas and tier 3 and tier 4 towns accept UPI as a mode of payment, the businesses especially, as they accept UPI as a mode of payment, they automatically become part of the financial system because transactions start happening in a bank account. And that's when access to credit also improves, because now companies then get data on how much payment or how much income this guy has, and based on that data, lending can be done.
Sure.
So unless we have access, because cash is something which is not, we do not have data on how much cash a person is spending. So unless access to data is there, lending cannot spread to rural areas. So in order to get access to that kind of data on how much payments are happening, how much income a person has, or how much imputed income can be calculated, for that purpose it's necessary that UPI spreads to these areas. And I think these are the two drivers, UPI and 5G adoption.
Got it.
I think lastly, we should not miss one definitely is the awareness of and the digital literacy, the awareness on the frauds that happen while these customers are new entrants to digital payments, but if they are not aware, they get trapped in such frauds. And
actually, that's a good segue into the question that I was going to ask as to what are the risks associated with cashless transaction, with digital transaction. You hear all kinds of stories where somebody got scammed of X lakh rupees or multiple millions and so on and so forth, which come in the news, but smaller versions of that would likely happen across a large population. So what's your view? And again, coming from NPCI, maybe I'll ask you since you kind of jumped into it. And after that, Prashant, I want to come to you with a specific question.
Yeah. So if we talk about risk, yeah, there are many risks associated to payments. One definitely I just mentioned about fraud risk. There is this cyber attacks. Then there are these AML, credit risk, regulatory risk is there. So all we need to ensure that we are well aware about the risks to mitigate them, and be aware of the threats and the new technologies which are coming in.
Okay. Prashant, you've heard the view of the two gentlemen over here who are the proponents of this, and yet we talked about rural areas and so on, and that this is not going to happen. We also hear of some countries who are taking the bold step of trying to do away with cash. Some Scandinavian countries are beginning to do that. Still, nobody has perfected it, but given the fact that India is already the leader by far in terms of both number of transactions and so on, how do you see this moving forward from where you sit? Of course, we've heard one point of view from Suraj and from Jeetendra, but I mean, what's your view given the completely different set of customers and people that you deal with?
So, you know, I think that the approach, even what as an organization we have taken, okay, one specifically if, you know, if you want to increase the digital transaction, the first and most important is the acceptance, okay. Though the billers numbers are increasing day by day, the onboarding of biller on digital platform, but that acceptance is going to play a major role. If there is no acceptance, there is no, you know, cash will still be there. And second point, what Jeetu mentioned rightly, the financial literacy, okay. I feel that that is very critical, the financial literacy, because in country like us, we need to ensure that how to use and do's and don'ts, how not to use. we need to be very clear with our customer. Because as you rightly said, in day in, day out, and in tier 1 cities and literate people, the tech savvy guys are losing their money on those frauds. So the financial literacy, both from the usage point of view and both from the privacy and security point of view, is very critical to ensure that this increases. And last but not the least, as you know, technology is going to play a major role. So a lot of fintech guys are here. Technology to ensure that the ease of usage or bringing the digital transaction in different avatars, there is a one role technology has to play, and then adding those AI ML flavors with technology, we also need to ensure that how we are going to prevent the frauds. Because if those numbers, currently those numbers on rise, if those numbers are increasing, that is going to be a major, you know, hurdle for digital transactions spike actually. So we need to ensure that the awareness is going to play a critical role. At the same time, technology, we need to leverage that technology to ensure that this entire digital journey happens within the security framework and within the actual quality framework. So that is something which we need to do. And I feel that we should not target to replace the cash or something. As you know, we were saying, it should become a preferred way of making the payment rather than we are trying to replace the cash. We should ensure that it becomes a preferred way of making payment with whatever the technology we have, then slowly it will go.
Okay. And that's a good point to mention. You know, one of the things I wanted to talk about, which, like I mentioned right at the start, is relatively unique to India, is a fairly established part of economy or the economic transactions where cash remains king for various reasons. We'll not get into the rights and wrongs of doing that or regulatory aspects. Do you see that changing at all, given that the entire premise of that transaction is that it should not be recorded or whatever, you know, or words to that way? Do you see that coming under the fold of cashless transactions? Because given the size of that part of our economy, it's unlikely to go away, which kind of strengthens the argument that PRASHANT had made earlier. Your views, gentlemen?
So if I'm not wrong, you're talking about the privacy.
No.
Yeah. So when I do any cash transaction, okay, nobody knows that what I have done. The tracking, I will say that we are talking about the tracking parameter. But you do a digital transaction.
And there's a trail behind.
Yeah. So as one of the point we were discussing was onboarding. Okay. So as you said, pre-sanctioned, pre-qualified loans. Okay. So indirectly, as a fintech or as an organization, we are reading his transactions. We know his spending habits, and then we, you know, recalculate or we come out with the credit worthiness of the customer, and then we give him a loan. So yes, few of the customers has that privacy as a, you know, factor for them where when they're considering. So you might have seen people using 2-3 mobiles nowadays, you know, to do a mobile transaction, to be a social on a different phone. Though they say it, they use it for a security purpose, but the privacy is also one of the concern.
True.
So I think we'll have to play a kind of a load balancing role over here to ensure that you know, we are doing whatever the digital transformation or the digital activities we are doing. Okay, we need to protect the customer privacy also. When that, you know, balancing will happen, I think the usage automatically will go up.
Thanks. We haven't talked about the development and the fast-paced movement of IT and IT-related systems, but that's probably a given in light of the discussion that we're having. So we've chosen not to spend a huge amount of time, but obviously there's a plethora of information and a body of research that is available as far as the IT movement is concerned, but we are taking that as a given in light of the nature of the discussion that we have. I'm conscious of time, but I'm going to ask each of the three panel members to give me a 30-second synopsis on and covering two things. What is really good about cashless and digital payments? Suraj, will start with you. And then I'll ask the second question after that.
I would say
30 seconds.
three aspects, especially when it comes to lending part. There are three things that are very important to us. And I think that's what has helped fintechs even compete with banks. And banks are giving a very good competition. I can see a lot of banks coming with great fintech solutions. There are three areas. One is convenience, that cashless payments or fintechs are playing on, which provides convenience to users. And second, I would say, is instant gratification. That's a very powerful tool because customers today are looking for instant gratification, be it lending services, be it food delivery, be it any kind of services that they're consuming, they need instant gratification over there. So any kind of services that you're giving, if they take too much time to get delivered to the customer would of course look for a better alternative. So instant gratification is very important. And third, I would say, is security. Security is a topmost priority for us, being in a highly regulated market. Especially we have one of the best regulators, which is the Reserve Bank of India. So security is topmost priority, and also security is important from customer's point of view, because just one fraud transaction and the entire trust in the system is gone, and the customer is never going to come back to the app, because the reason the customer is using the app, the reason is the customer is trusting you with his financial transactions or with his bank account or with his lending services, is because he trusts your platform. He knows that the data that he has provided is safe with your platform. So that's the three important pillars. One is instant gratification, second is convenience to the customer, and third is security.
Thanks, Suraj. Jeetendra, again, I'll reiterate the 30-second part of it. Huh?
Yeah, so quickly, the first one is definitely efficiency, which is rhombus digital onboarding we talked about. Obviously, if a customer is getting a competitive edge in terms of digital onboarding, the lender can do faster disbursements and repayments. Second, obviously, moving ahead with the enhanced customer experience. If he's getting all this with convenience, I'm sure he's a satisfied borrower and he can be retained for long run. So, yeah, I think these are the two key things we need to keep in mind.
Brilliant.
Yeah.
Thank you. And yeah. PRASHANT?
So, again, I will use my customer experience itself. So, the convenience or ease of use, something where, my driver says that even when they are in the traffic or something, they can just click on it and make the payment. They need not visit my branch to do the EMI payments. So ease of use definitely is there. And the second most important is the tracking. Okay, they can track what they are doing. As they are doing all this digital transaction, it's easy for them to track what they have done, and then they can plan their future accordingly.
So there you have it, folks. I think if we look at the overall benefit, if you like, the ease, the speed, the customer experience, the trust, the security, tracking, and so on and so forth. I think pretty much everybody seems to agree with that and seems to suggest that this is an area that will continue to move forward. India is at the forefront. I think we are providing a leadership to the world, and nothing is there to suggest that we will not keep this position. The innovations are happening over here, and we will continue to, as far as we can see, continue to lead the world in this. So there we have it. I suspect we now have run out of our time. I can see from the corner of my eye. Do we take questions now?
I think we can take a couple of questions in the interest of the time. So first of all, ladies and gentlemen, a big round of applause for this wonderful panel on digital payments, wonderfully moderated by Mr. Sharma. And thank you so much all the panel members for giving your valuable insights into it. We are short on time, that's correct. So we'll take only 2 quick questions, and of course the panel members are available post the session as well. So quickly, if you have a question, please raise your hand and you will get the mic. Please introduce yourself and your organization and question to which respective panel member. If it is a generic question, I think Mr. Sharma is the ideal person to decide which panel member should be the right person or the right candidate for that question. So any question from the audience? I would request you if you could keep your hand raised so that that's right.
So myself Himanshu and I'm from Tata Capital. So my question is to Jeetendra. So basically you know the new technology which you introduced in GFF, which was withdrawing hard cash via UPI. So I had some basic questions regarding to that. That is my understanding. I wanted to know your understanding in perspective of NPCI. So basically what will happen to the existing ATMs? That is one of my questions. Will it be there or will it not be there? Because basically it's an end to debit cards, whether it be RuPay, MasterCard or Visa. And will there be new machines for this, or the technology will be enabled in the existing ATM machines? Because this will enable a new cost to NPCI as well the government and whatever the norms will be there. And the question here is cash dying or transforming? Basically, one digital payment you are using for withdrawing cash. So basically what is happening is that you are introducing more cash in the market. That's what my point is. I wanted to understand yours. So what is the perspective of NPCI in introducing this technology? Because the crux of the digital transformation is to reduce cash payments and introduce more digital payments. So what my perspective is, I see you are cannibalizing your own product here. So that was my question.
Sure. So yeah, this is called UPI ATM or smart ATM is what we named it. I know it's gone quite viral in Global FinTech Festival. We launched, we had a showcase of this. So yeah, this is basically a cardless cash withdrawal because I just mentioned there are about 350 billion UPI users who are using smartphones. So definitely nobody's carrying cash, and like sir mentioned that cash is diminishing, but it cannot be eroded completely, right? So people have to use cash as per their preferences. That could be for privacy, that could be for emergency where electronic payments are not functional. So there are reasons. So hence we have come up with this smart ATMs. And you just talked about yeah, debit cards being eroded. Yeah, with the stats that we hold more than 700 million debit cards, and largely ruled by RuPay, because Visa, MasterCard would hardly have another 30%. But we see the activation, which is like active user per debit card, is negligible. It has completely diminished. So yeah, we are seeing people either using UPI. So today with the convenience of UPI, we also want to give an experience to these customers to even throw away their debit cards and go and use cash withdrawals through UPI, scan and pay.
Thank you. And one final question from the house. Can we have the mic?
I'm Prabhakar Shetty, representing Expert Finance company. Is there any possibility of encroaching our customers by these payment, digital payment companies, because they are also entering into the lending business?
Sir, any particular panel member the question is addressed?
Any member can
So
address.
I think
So, sir, you are into lending, right?
Payment companies are getting our all payment particulars they are getting, and they are also entering into the lending business. Is there possibility of encroaching our existing customer in future?
So, I would say rather than payment companies taking the customers of NBFCs inside banks, payment companies right now have a very good customer base of their own, which they are already servicing. So they're trying to capitalize on the existing customer base which they have. For example, it can be Razorpay or PayU Money. If they are already providing payment services to their existing clients, and they already know how much spending or how much income these clients have approximately. Based on that, they are giving lending offers to these customers. So of course, these customers are already customers of or some other bank. So there will always be some player trying to take away the customer from other player. But here the efficiency matters. If a payment service provider is able to give instant loan without too much documentation or without too much hassles for the customer will prefer that. But ultimately, as we always see, customer experience matters here, because if as a customer, if I am already working, if I'm already taking services of a particular lender or particular bank, and if I'm happy with the services, if I have a long-standing relationship with this company or with the bank or the NBFC, I would always try to approach them first rather than taking loan from some other company, because I already have a relationship with them and I already have trust them for their services and also for their transparency. So customer experience is something that's going to matter in the long term, because every company is going to come up with digital solutions. Every NBFC, every bank, every payment service provider, and in fact, every e-commerce provider is going to provide lending services. So be it Flipkart, Amazon, everyone is going to get into lending. So when it comes to lending, everyone is going to have the same suite of services, same suite of solutions. So the only differentiator that will be left would be the customer experience that you're providing and the kind of trust that you have with the customer and the kind of relation that you have maintained with the customer. So that's why every company is prioritizing. So if you see in the last 2 years, customer experience is something that you are hearing day and night. Before COVID, I think nobody mentioned about customer experience. That was the third most priority. Right now, it's the top most priority. So customer experience is a field where brands are competing right now, because that's where the real differentiation is going to happen, because technology will keep, it's something that will be taken up by everyone. So there won't be any differentiation when it comes to technology. Even if there is differentiation, it will be very for a short period of time. In the long run, everyone is going to catch up with the solutions. So experience matters over here. So the kind of relationship that you have with the customer, the kind of experience that you provide to them will help you retain them in the long term.
Thank you, Suraj.
So to answer your question in short, we do have that fear also. When
the payments comes, immediately one message goes to them, instant loan available from us. Like that message goes sometime.
So we being an NBFC, we also had that, fear to us that, the fintech specifically who comes, okay, after some time they becomes more of a fin and less of a tech, and then becomes a challenge. So what we approach to the way is that we also, we are doing a business in traditional manner, so we'll keep on doing that. But to fight with those fintechs, we also need to take a kind of a 2.0 avatar to fight with them, and we'll have to in the battlefield with them.
Thank you so much, panel members. Now I would request Mr. Milind Kadam, Senior Director, Enterprise Sales from APAC and MEA from Kalera, to kindly do the honors of felicitating our wonderful panel of experts here. Milind, thank you so much for doing the honors. We'll start with Mr. PRASHANT DESHPANDE, CISO and CDO from Shriram Finance. A big round of applause to Mr. DESHPANDE for his wonderful contribution in the panel session. Moving next to Mr. Jeetendra Manik from National Payments Corporation of India. A big round of applause to Mr. Manik for his wonderful contribution in the panel session. Moving next to Mr. Suraj Shetty from Ring. A big round of applause to Mr. Shetty for his wonderful contribution in the panel session. And moving next to our honorable moderator for the panel, Mr. Sumit Sharma from Radian Finserv. A big round of applause for Mr. Sharma for wonderfully moderating this panel session. I would now request the honorable panel members to kindly come forward for a group photograph, and Milind, if you could also join them. A big round of applause once again, ladies and gentlemen, for this wonderful panel of experts on digital payment. Is cash dying or transforming? And we had a fantastic session of discussion with a plethora of industry experts here, and wonderfully moderated by Mr. Sharma. And thank you so much, Milind, for doing the honors of felicitating the panel.